you go from spending money and pouring it into holes in the ground, literally, to making money if you've got a good mind. And that transition has surprisingly high rate of success and very high rates of gains and returns for investors.
Hello there, my friends. Chris Marcus here with you for another episode of Inside the Markets on the Arcadia Economics Network. And before we get started, hit that subscribe button now because as you're about to see, we have some great guests on the show. And today, joined by Louis James, also known as Lobbo Tiggre of the Independent Speculator. Had the pleasure of reading for many years before finally catching up with at the Sprott Conference in Vancouver. So Louis, great to have you on the show. Happy New Year, and how are you doing today, my friend?
I'm a happy camper. I had a terrific quarter, the last quarter. While markets were melting down, I was a contrarian investor, so things are actually looking great for me for this year. Hope it's true for you and your viewers too.
Yeah, it's incredible. Certainly a lot of unusual things happening in the market, but when you understand what's happening and you're prepared for it, as you have been, really does give you a lot of sources of opportunity. So perhaps just to get started, like you mentioned, we've seen a lot of volatility in the stock market, as many of the gold and silver folks have been talking about with interest rate cuts. Eventually there was going to be a day of reckoning. Are we seeing these bubbles finally pop now?
Well, that's the million-dollar question there, potentially quite literally. It's, the Fed is trying to engineer a soft landing. Everybody knows that rates had to be normalized. It's not that the Fed is, within the context of the Fed even existing at all, it's not that it's doing the wrong thing in theory. It's just a question of how much, how fast, what's the right level. And that context is one that I don't think any human being can answer. And it's possible, actually, that there is no good answer. If what was done, all the crazy things that were done in response to the crash of 2008, if the correct answer was the Hayekian answer of we should have let it crash, we should have let all the distortions in the markets from before be liquidated and then reset on a firmer basis, if that's what should have happened, then there is no right answer. There's no way to engineer this soft landing in a way that doesn't blow up the bubbles, because everything is a bubble. The everything bubble, as Doug likes to call it.
Right.
So I don't know. I mean, my libertarian leanings, my Hayekian background, my Austrian economics tells me that it's all a giant bubble. It should all blow up in a spectacular way. Doug Casey's Greater Depression should be around the corner. But you know what? Honestly, I thought that in 2008. I did not see how they could possibly get out of the squeeze they were in. Neither could Doug. I asked him, other people I respect. Nobody right thinking, right, who really understands markets the way I do and I think is correct, could really understand how the powers could kick the can down the road again. And yet they did. So it's possible that even crazier things could be done now. So who knows? But I will say that if they do that, if they have to pull out the stops, they tripled the money supply last time to kick the can down the road. Maybe it'll take 9 times this time, an order of magnitude. Who knows what they'll have to do? But if they do, I think we'll see, the everything bubble with gusto, and I think that'll be fantastic for commodities in large and specifically for precious metals. I think the writing will be on the wall and people will be piling in.
Yeah, it's incredible what you mentioned there, Louis, because I don't know anyone could have imagined quantitative easing and all these other maybe
the negative interest rates in Europe, not Botswana or someplace like that, but the ECB taking rates negative. Who would have thought?
Yeah, and it's funny because people look at the dollar index a lot, which is the dollar measured, I believe 70% of the basket is the euro and the Japanese yen, which are both in negative interest rates. So again, just fascinating the world we're living in. Although I was actually home back in New Jersey visiting my mom last week, who I've brought on board with the gold and silver argument, so she gets that. Although she had a question that I'm guessing a lot of other people are also facing, where she has money in regular stock market funds and now is wondering, all right, she gets that there are problems. She sees, understands the things you and I are talking about, yet wonders, well, do I sell things now when they're down? Do I wait for a rebound? I'm curious, how do you go about approaching that?
Well, I'm not a CFA. I'm not actually licensed to give anybody advice at all. I write about what I do with my money. And right now, I'm completely out of mainstream equities. I don't see the correction now. It's just a healthy correction on the way to higher prices. And, if nothing else, just, what are the odds? We've already had a record-breaking bull on Wall Street. What are the odds that the correction now is just a dip that should be bought on the way to new higher highs? It could happen. Who knows? And especially if the Fed opens up the spigots of easy money again. Or even if they don't, if Trump and Xi find a way to both say to their constituencies that they won the trade war and everything's going to be great now, and call off the war, either one of those or both combined could really light a fire under Wall Street again, as well as commodities that I mentioned before. But it would be very good for commodities.
Right.
And so it could happen. But after this record-breaking bull, you start to see the wave crest. And it seems like here we are, January 2019, and we could have the same conversation about Bitcoin a year ago. And if you ask me, is this just a correction and we're going to newer highs? People could, muster arguments for why Bitcoin had to go to 100,000 or 1,000,000, right? There's only X amount that are ever going to be made. And that would have been a bull trap of monstrous proportions if anybody was buying Bitcoin a year ago. They'd be taken to the cleaners by now. And that's a very real possibility for all mainstream equities. So, would I tell people to go out and sell? I'm not sure I would do that. It could be wrong, but I'm sure not buying.
Yeah, which makes sense to me, especially because, like you point out, with stocks some of the stock market's still up threefold or more since lows of 2009, whereas gold and silver, which you write about a lot, still kind of on the low end of the range. And I wonder if people continue selling stocks, that frees up a lot of investment capital. Do you see a lot of that flowing into the gold and silver space at these levels?
That's a really interesting question. I'll broaden it a little bit or add to it a little bit, because a lot of people like to say, oh, well, Bitcoin was eating gold's lunch in 2018, or now it's going to be the pot stocks are going to, take away that speculative capital. I see that, and I think to some degree it's true. That does happen. Capital does flow to whatever seems the most exciting at the moment. But frankly, if gold prices have been taking off, and if the fundamental driver there, higher prices, had generated the interest, that capital would have come right back to what was most exciting, if that had been gold instead of pot stocks, or whatever. So yes, there's movement, but these things are really not the same. You can't hold a supposed Bitcoin in your hand, but it's a ledger entry. It's not the thing. Gold is a long for which there is no short. It's the thing itself. It's a value that you can hold in your hand. And the legal marijuana is clearly a business that's going to be with us. It's a growth sector and so on. But where is the Warren Buffett moat that you can protect some sector of that? It's called weed for a reason, right? It grows everywhere. So I'm sort of broadening your question here, throwing other things in, because people ask this from different ways, and I want to address them all. Gold is gold. Gold is history's longest and most proven safe haven asset. And you can see it on days when the sphincters tighten up and the needle swings over to fear in the market, like today. You can see gold doing its job and acting as a safe haven. And sorry, but that's not Bitcoin, and it's certainly not a pot stock or anything else. By the way, it's not palladium or rhodium either. Nobody even knows what rhodium looks like, but everybody knows what gold looks like. So no, I don't think any of these other things will eat their lunch. I don't think it needs to be freed up, this capital, from other places. If it is, great, but it doesn't have to be. The markets will respond to higher prices. And if we're right about the stars being aligned for gold in 2019, the capital will flow in that direction.
Yeah, it's It's amazing that it's taken as long as it has, in my opinion, especially with the massive amounts of money printing that has gone on over the past decade. One of the things I've been excited to ask you about, though, is obviously there's a lot of people sitting there waiting for gold to move, yet you dig into a lot of the mining stocks, which, when you know where to look, seems like there are a lot of opportunities to make money, even with gold and silver in the current range. What are some of the things you look for, especially with the trading patterns we've had the past couple of years, to find sources of income?
Sorry, are you asking how I pick the better gold stocks, or I'm not
Yeah,
clear what you're asking.
I guess what in particular, when you're looking for ways to make money when bullion is sitting in the range that it is and you go into the stocks, what are some of the things that you look for?
Okay, sure. Well, for it's really interesting that gold being range bound, right? And it's been range bound for years with significant volatility, but that's gold. Is seen as a bad thing. If you're a businessman who makes shoes, say, or Coca-Cola, for prices to remain stable for years, that's a good thing. You can optimize your costs. You know what size of equipment to get. Your predictability in your business space is a great thing. So the fact that gold has been range bound and that's been treated by gold investors as bad, it's irrational. It's this emotion. We want it to go up, so that's bad that it isn't. But in fact, that's actually pretty good for business. And in the bad news is good news department here, it's fantastic news for people who've been on the sidelines or have capital that they've held off and are now coming into this space, because we know who makes money right now at these prices. And if we're right about gold going up, they'll make even more money, unless they mismanagement. But, other things being equal, they should make even more money. They should be even better bets. But because the sentiment is so negative, they're on sale. So, I mean, it's a perfect opportunity. We have low prices, relatively speaking, in the equities, and we have the wheat separated from the chaff. You can very clearly see who is making money and who isn't. And some of them even pay dividends. So you can make money now buying profitable companies now, as is. And if we're right about higher prices, then the speculative upside is fantastic. Of course, other ways to make money, even if range bound or prices are weak, the market always loves a discovery. So, backing the prospect generators that have really good portfolios and other people's money going into the ground, that's one way to get it out of the ballpark, even in a weak market. And my other favorite investment area, this is a thesis that I'm fairly well known for, my work, which I did when I worked for Casey Research before. It was called The Golden Runway by the marketing guys, but really that was just a way to talk about the pre-production sweet spot. And that is when a company makes a transition from exploration and development to production. It doesn't count if you're already a miner and you build a new mine. This is a first-time mine building. That transition adds huge value. You go from spending money and pouring it into holes in the ground, literally, to making money if you've got a good mine. And that transition has surprisingly high rate of success and very high rates of gains and returns for investors. So that's one of the main foci of my current portfolio right now.
Which makes sense, because I think something that I know you mentioned before and other folks in the gold and silver space, that when you're talking about miners versus bullion, it's a bit of a different proposition where you're making a different bet. And obviously, if gold goes up, but the miner doesn't have any gold.
Let me jump in there, Chris. I would say it's a completely different thing. Not even a different bet, a different thing. I buy bullion personally as savings. I don't even have a savings account at a bank. Why would I want to do that? If there's a bank holiday and suddenly, a bail-in happens or something, that's not savings.
Right.
My savings are in real estate or gold bullion, physical stuff that would be hard to simply seize by fiat if push comes to shove. And this is very Doug Casey-esque. That's something Doug taught me when I sat on his knee as a little investor boy, and grew up in the industry, and he taught me everything he knows. One of the first things is that gold itself is not a speculation. It is the only financial asset for which there is, no liability on the other side, no counterparty risk. So I buy gold for prudence. It's not a speculation. I don't care whether the price goes up or down. That's where I put my long-term savings. Completely different thing from, I think, the technicals and the fundamentals favor gold rising in 2019, which I do now. And by the way, I'm not just a gold cheerleader. I was not so optimistic about gold and silver in 2018. And I was more bullish on uranium, which I was right about, by the way. But I didn't go out there and say, everybody, oh yeah, I love gold, go buy gold now. I talked about, as you just asked, where can we make money even if gold doesn't go up? But I've changed my tune now. I do think 2019 is looking up. And therefore, I'm speculating, as you're saying, on the stocks, the equities. Very different thing from bullion itself.
Yeah, I think that's a great point because, again, the bullion being more perhaps conservative and like you said, the mining stocks, I think they can be a great speculation, but good to go in knowing that you're speculating with a different set of risks. You also mentioned uranium, which I've been excited to ask you about. I'm a little bit newer to that market, although up in July, I heard Amir Adnani speak and a lot of the other folks. Like Rick Rule mentions that they're paying $60 to get it out of the ground, selling it for 30, making up the difference on volume. What can you say about uranium? Obviously, prices are up a little bit. The miners, as you wrote about recently, have not quite gone up yet. So what are you seeing there?
Well, actually, the stocks have tracked uranium, some better than others. But you look at somebody like Cameco, which reported, horrific losses, and they shut down their best, highest grade crown jewel mine, McArthur River up there in Canada. They shut it down, not because it's a bad mine, it's their best mine, but because why would they deplete that asset now when prices are low? And they would really be what's the right word here? Why sell at a loss now when if they can just cool down a bit, wait a bit, they can sell at a profit perhaps in a few months, perhaps next year, we'll see. But what I'm saying is, even despite all these difficult choices that company had, the stock, if you look at the chart of the last year, it tracked uranium, which was one of the best performing metals of 2018. So, the stocks are doing their job. Their job, by the way, isn't just to track, but to add leverage to the underlying price. Right. That's what makes them such a great speculation back in the gold space too. I like gold as a safety investment. I speculate on gold stocks when I think gold is rising because it multiplies the rise in gold. Uranium does the same thing. We are seeing that, but it is. I think what you're picking at here is the most recent action has been really striking. In that when in the final quarter of 2018, the mainstream markets started seizing up and Wall Street started going down and correcting towards bear market territory, and all three of the major indices, really scary downturn. That hit a lot of the uranium stocks as well, even though uranium prices were rising at that time. Now, so if you pull back and look at the year, the quality uranium stocks had a good year, so did uranium, and I expect the same thing in 2019. But in this last period, you had a really, I think, extraordinary circumstance where the value of the companies was continuing to increase. Right? Uranium went from 25, 27, 28, 29. It's pulled back, a couple times now, but it's still closed out the year at a very good increase. But at the end of the year, the stocks all pulled back because people were selling everything. People were panicking and throwing out the good with the bad. Just get me out of this market. And frankly, I think that's an opportunity, but one to be careful of, because it wasn't just a day, right? It wasn't just October. It wasn't just the November retreats. It wasn't just the December debacle. The Christmas Eve Grinch came in and just trashed the Dow and the S&P, right? Those uranium stocks sold down at that time, even though there was nothing happening to uranium that was bad at the time. So you could say, oh, opportunity. That's true. And it is an opportunity. But that doesn't mean, and what the markets are showing us is that there could be more downside in the near term. Even if the next uranium price quote comes out and it's back up and goes over 30 or something, if at the same time you have Wall Street melting down and people are just panicking and hitting the bid, you could still see some of these stocks sell off. Now, I think that can only go on so long. I mean, value and price can't separate forever before one or the other has to budge. And with the value being driven by very strong fundamentals, the uranium can't be mined profitably at current prices. So I think it's the price is going to catch up with the value. I think it's going to do it explosively. I think it's going to do it in 2019. But that doesn't mean that prices in the very near term and these equities couldn't go down a little bit more.
It's a great point, Lewis, and I appreciate you mentioning that because there's what fundamentally should happen. And then, like you point out, when people are selling everything, similar to how when the last crisis we saw gold and silver sell off dramatically before they eventually went higher. And certainly with the miners is generally a bit more of a long-term patient trade that you're putting on if people are getting involved.
Yeah, I keep saying this, and it's become a new mantra for me, is I'm not a cheerleader. I'm not here to say, oh yeah, I'm long uranium, so everybody go buy uranium stocks and try to get people to buy stuff. That's not my job. My job as an analyst is to call it like I see it. And I'm trying to give you, the truth as close as I can get to it. This is what I see. Sometimes it's more enthusiastic, sometimes it's not, and it's my job to give you the good, the bad, the ugly, whatever it is.
Which I certainly appreciate. It's been nice in the general in the Austrian economics, precious metals community, that's often more the way people approach things as opposed to a lot of what we see on Wall Street. The last thing in wrapping up, thought would be interesting for folks to hear a little bit about. Obviously, you've worked with Doug Casey and Casey Research, and then before going out to start your own business, and having gone through a similar process myself, would just love to hear how that's going, how that transition has been, and how everything's going now with Independent Speculator.
Well, that's a wonderful question to ask, of course. I'm very happy to talk about my business. It's really interesting, and I'm going to be honest with you here too. It has been much harder than I thought it would be to get attention of readers. I had 10,000 paid subscribers when I, turned in my hat and closed my desk at my prior employment. And I would have thought, okay, 10,000 paid readers, I should have at least, half, 3/4 of those sign up for my free product, right? That's not much to ask. But it's been really difficult. I only have about 1,700 free readers right now. I find that astounding because it's me. I wrote the flagship letter there for 10 years. It had my name on it. And I would have thought that a lot more people would follow. And that's the paid, the unpaid universe at my former employers is hundreds of thousands of people. There are over 15 years, there are probably 1 million or more people that know my name in the financial context and know my track record, by the way, which is pretty good too. And it's been like pulling teeth, even to get people to sign up for the free thing. But the weird thing is, or I guess the good thing is that, a lot of these people do know me. They do know my track record, and I beat the market consistently. So getting those people to sign up for the paid service has actually been easier than I thought. Like I went into this thinking I'd get, tens of thousands of free best friends who would, read everything I was willing to give away. But it'd be really hard to get people to actually, pay money for the service. But it's been the opposite. I have a very high conversion rate, and I started out with a bang. I will see if I can maintain it. But financially, it's been very rewarding to go into my own business. And I'm a very happy camper. I'm doing things the way I want to, and I can look myself in the mirror and feel proud of the work that I'm doing. I can correspond with my readers again. I'm very happy. I'm very excited, and I'm very keen on the quality work that I'm doing and delivering the results that I know I can. So thank you for that question. But that's the reality. It's a very strange thing. I guess it's the sign of the times, the market, that it's so hard to reach out to new people and get people to pay attention to resources when the general markets were going up and resources were in the doldrums. But happily, it's been a success. I'm glad to say.
Yeah, and I'm glad to hear that. Certainly, I've experienced how starting your own business, it is a different set of challenges, a lot of different skills that you pick up and learn, yet it's been exciting to see how things have gone for you. And I can say I do get those columns, a lot of great information you share there, a lot of good ideas for people to have in mind. And like you point out, it's not the easiest time to be doing something like this when, the stock market is a bubble and sentiment in gold and silver not so high right now, but because of the reasons you just outlined and spoke about, I certainly agree with that. We are close, hopefully close, but at some point going to see quite a turnaround. And I think folks would be well served to find you at the Independent Speculator. So Lewis James, a.k.a. Lobbo Tiggre, thank you so much for joining me today. I think you're putting out great research, and we'll look forward to checking in with you again soon.
Thank you very much, Chris. And a great, happy, and prosperous new year to you and all of your viewers.